Good morning, traders. Welcome to the Trader's Edge report for Monday, January 8th. All right, guys. Well, the trend continues right out of the gate for 2018. 4 days up, straight up. We're melting up. That is that last phase that we're looking for, that euphoric phase of just buying the market at any cost. Obviously, it's just a dumb thing to do. But, however, that's what the retail public wants to do. They're also hearing about, on Bloomberg and CNBC, and I'm not going to mention names, managers saying that the market is relatively cheap from last year, which is absolutely insane. It's not cheap. It's actually very expensive from a year ago. We've not even had a reset in the market of pulling back and resetting itself, so you can buy the market. And also, analysts are bringing down earnings for, believe it was like 8 quarters in a row. Don't quote me on it, but I know it's been something ridiculous, so they can beat earnings. So it's just absolutely insane. But we want to get into the little nuggets of what we're finding during the day and what we do here at TMT for our subscribers. Obviously, this is just a free little video to show you, so you maybe get some ideas in what the market is doing. The markets are basically melting up, so the only thing that we can provide is any type of technical pattern and or support off the daily chart from our algorithm that we spit out, that spits out actionable areas to short and or to buy. And then, of course, any technical patterns like you see here in OIH. Now, we mentioned OIH after we did our work, right around $26, now trading at almost $2 higher, into that area of resistance. If you follow the videos from last week, you could see that that is an area of resistance, and I would be trailing up stops. And I've got some emails that you guys did buy OIH. Now, another thing to do, and what we show you here at TMT, and I'll just bring it to you guys, you know, what I like to do is I love looking at ETFs because they give me nuggets of individual stocks, and I take the top 10 holdings in an ETF and I'll dial it down into certain stocks, and I'll look at what the top 3, top 4 heavily weighted in that ETF are doing. And if you look, and I'm just going to show you guys, just for an example purposes, this is NOV, and NOV actually is heavily weighted, one of the top 3 peers, in OIH, and it had a phenomenal run from 36 to 38 and change. Schlumberger is the SLB, is the biggest name in this oil services ETF, and it had a monster move as well. And you can see it went sideways for about 4 or 5 days. Now, obviously, this pattern was more of, let me just grab the bigger, let me grab this view here 1 second. I'll give you a better marker. Now, this pattern was obviously in a downtrend, and you could see this more of a bullish falling wedge, if you will. You have some lows, higher highs, and lower lows and lower highs, and then we broke out of that wedge, which also broke out of the TMT proprietary price channel here in green and red. Once that happens on a closing basis, you can actually even start to buy that, and our algorithm states and looks for that. You could see that had that big one monster move, and then went sideways for about 4 or 5 days. Now, going sideways for 4 or 5 days at an upper end of the range is actually very bullish, especially when you broke bearish symmetry. So this was actually another one that's on our radar. That was on our radar, actually. Now, are you going to chase this? No, absolutely not. But would this still be in play on a pullback? Sure, absolutely. And why? Is because since it broke the bearish symmetry, we want to see the next pullback make a higher low from this previous low of 67.46, and so on. So this is what we do here, and we wanted to show you guys some great ideas. Obviously, the same thing goes for OIH. You want to wait for that pullback to come in. Once that pullback is complete and makes a higher low from the previous low of 26.03, and then the next takeoff would be absolutely the bigger move coming off of this ascending triangle here in OIH. Next is going to be just a CF, and some of you guys still have it. We had, I think a couple weeks ago, we had the video coming off of this breakout here, and we said we look for the pullback into this 21 EMA back here, or a sideways consolidation and the breakout. Well, we caught the breakout. Some of you guys are still long trailing every day. Just keep a tight stop. Don't want to lose all of your gains from this breakout. But yeah, the CF is definitely in play. I'd love to see it come back down into the 41 area, 41 and a half, if you will, and then see higher prices from there. All right, and that's going to be a CF update. And of course, we're going to be looking for, the market's very expensive, but we're looking for little nuggets here of some sort of value where the ETF or the individual stock really hasn't made its move and based. And that's what's going to happen. That's what the dynamics of the market is, because when this market gets to be over expensive like this, overly expensive, Where are you going to put your money? You don't want to keep buying the market here when we had a 2017 run and market continues to run up there. No, what we look for is, and you'll get that sector rotation when money will come out of ES a little bit and roll into another sector, industry, if you will, and that'll continue to hold the market up. As long as you have money coming in and going into different sectors, you're going to have money, you're going to have the market still be stabilized. Now, you might have a sector like technology taking profits and going into whatever, industrials or paper or something like that. That does happen, and that's fine, but the market still gets buoyed, so just keep that in mind. All right, the bigger area here, guys, is going to be 2688. That's going to be, and I know we're way away from that, but you could take the previous day lows as support, and if that breaks, the next day will be support, and then so on and so forth. So, the bigger support area coming in here, you could see we don't have it marked here like we do in green, because this is really the true area of support off the ES. And then I'm just going to show you the spiders before we call it a day. Same thing. 267.87 is the same. You can take the previous day lows, okay, buying the pullback or buying a deeper retracement. We do have intraday levels for our Pro Trader Premier video, guys. Bar none, take a look at it, guys. It's really amazing. And that's what we've been doing. Do not short the market. There's no reason to short the market unless you're very quick and we get an intraday reversal, then absolutely, because you get all the buyers caught from the morning if you get some sort of reversal. But until then, I would just continue to buy deep pullbacks until it doesn't work at the moment. Hope it helps, guys. We'll see you tomorrow. Take care.